Good afternoon. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. We'll do our market watch, stocks we're paying attention to, and of course, the local and national stories that you need to know as well. Here on this Thursday, is this first week of January officially being back to regular scheduling again, is just flying by quickly here. And let's get it started with that market watch. Well, here's the news today, folks. Yesterday, we saw the momentum of the beginning of the year kind of waver a little bit. And then today, we're seeing people rotating out of the tech stocks again, which is what we saw in December as well. Dow Jones right now up 319 points to 49,307. The S&P 500's down 2 points to 6922. The Nasdaq's down 98 points to 23,486. I mean, that makes sense since the Nasdaq is tech heavy out there. Then the Russell 2K, that small cap index, is is up 33 points here today. 2602 there for the Russell 2K. And then there's Bitcoin just hovering there like we saw yesterday at the end of the show, 91,224. So just hovering in that same area as yesterday. Technically, it's down 55 points today, but here in that 91,000 range that we're looking at here on this Thursday. And tech's being influenced heavily, right? Last couple years, tech is what's driven the market up. We saw some sell-offs there in December with some fears about the AI side of things, and now we're seeing it again here, at least here today as well. Stocks we are paying attention to early. Well, let's look at some of those tech stocks out there. NVIDIA is the first one we're going to look at here. It's down 2.33% right now. Names, large companies, big conglomerates, investors are exiting out of NVIDIA. No doubt taking a lot of profits out of NVIDIA at this point as well today, but 2.38% down, kind of leading that stock market, and those trades and those indexes down here as well. Oracle, fellow AI company here, right? Oracle is the next stock that we're going to look at. They're backwards as well today. They're down 1.20% as of right now. And then even Apple, and this is fascinating for me in Apple. Apple's down 1.19% here today. The bigger news on Apple, because, beginning of the year, I just went back and was looking at what happened on January 2nd, and obviously this week we've seen it all. Apple's down and been down for 7 straight days now of losses. Apple's at 1.11% down here today as well. So tech stocks driving the index down. People are getting their money out of techs, and it's leading into some other stock and other industries to go up here as well today as people are switching their money out of tech. So something to pay attention to. It happened in December quite frequently at the beginning of December, and January starting this way as well. So something to keep our eyes on. There's always some news story that puts people back into tech, so we do have to keep our eyes on that. But as of right now, at least it looks like a move away from there with these tech companies on the stock market. Stories that we're paying attention to right now, we got some information out there, like the ADP report came out today, the private payrolls company. In the private payrolls report, well, we found out it's kind of disappointing, but the private sector added about 41,000 jobs in December. And this, like I said, is all ADP's reporting. This came out yesterday afternoon. So it's below economists' estimates of a gain of 47,000 jobs. The prior month's payroll numbers was revised from a loss of 29,000 from an additional initially reported loss of 32,000. So it was revised a few thousand better. What positions are specifically being affected, positively or negatively, where education and health services, they're up 39 positions. So a lot of job creation in December in that specific field. Leisure and hospitality was up 24,000 jobs in December as well. But trade, transportation, utilities, they added, but not as much as they had been. There are only 11,000 job openings, job positions in those fields. Financial activities and other services, well, they're up 6,000. Well, financial activities, was up 6,000. The other services, things that fall into those other categories, they're about 5,000 jobs up for that specific category. Well, Some other things that have been big numbers as well: construction, natural resources, and mining. They both were up about 1,000 jobs at that point. Construction looks and appears to be slowing down a little bit here in this economy as well. So, what lost jobs? Well, professional business services, they lost 29,000 jobs in the month of December. Information and manufacturing down 12,000. I'm sorry, information went down 12,000. Manufacturing went down 5,000 jobs and positions in the month of December. I wrote that a little weird, folks. So I appreciate you sticking with me while I got those numbers correct for you. Interesting enough, right? Large businesses, small businesses. Large businesses are 500 or more employees. If you didn't know, well, they actually added 2,000 jobs in December. But businesses, the smaller ones, 50 to 499 employees, they added 34,000 workers in December as well. So the small companies, the ones with fewer than 50 employees, they actually added 9,000 jobs in the month of December also. You want to talk about this job growth, even though it was smaller than expected? Wage growth in December, well, it was little change from last month. People staying in their roles saw their pay climb 4.4% from the year prior, but pay gains for those that were staying at their jobs, well, it grew slightly to 6.6%. It was at 6.3% in November as well. So, wage growth, a little bit of improvement, or at least flat, or a little bit of improvement from that perspective as well. What does this ADP report that came out yesterday afternoon mean? Well, not a whole lot because people pay attention to it. But more importantly, tomorrow, Labor Department's non-farm payrolls report is due Friday morning, tomorrow morning here, and these numbers vary wildly between the Labor Department's report and the ADP report coming out as well. So tomorrow's numbers are going to sway the market if they come in badly or good as well out there. So what we're looking forward to, but gives a little bit of an insight of what the economy is in terms of jobs here with that ADP report out there. Then we get the news here, right? The trade deficit is always on everybody's mind when you talk about government spending, government pullback, government expenses, right? Well, we did find out here the U.S. trade deficit 6 months, since the Trump's tariffs went into effect in April. Well, the trade deficit is way down, folks. It's tumbled to its lowest level since mid 2009. This is from the Commerce Department, and it came out this morning, the reporting. The exports rose and imports fell. The trade shortfall was just $29.4 billion for October. That's down 39% from the month prior. Exports did increase 2.6%, but imports did slip about 3.2% in that time frame. The total was the lowest since the second quarter of 2009. That was when the U.S. was just barely starting to come out of that financial crisis with that great recession, as we called it. The numbers do reflect the trade activities since Trump, levied those tariffs back in April of the 2025. So the year-to-date deficit, well, it's still 7.7% higher than the same period basically 2 years ago now in 2024. Got to remember, it's 2026, right? Third quarter productivity did rise at a 4.9% clip, according to a separate report that came out early Thursday morning. So third quarter productivity, quite a growth amount of 4.9%. That reporting came from the Bureau of Labor Statistics today as well. So this rise in productivity did help push unit labor costs down about 1.9% for the period of being recorded on. Far more than expected, and it is an indication that the labor market's not putting any upward pressure on inflation at all. So not big pay raises causing inflation to go up either. Not affecting that side here with those two reporting out there. So we got the jobs report from ADP, the private one, and then of course these two reports also here earlier today. And then, just as a kind of a follow up here, I told you about this headline yesterday. It broke right as the show was starting. Didn't get much details on it, so we figured we'd hit it today and what more of it means. But as we told you yesterday at the beginning of the show, the breaking news, President Trump did come out and say he was going to take steps to prevent institutional investors from buying single-family homes. And I firmly believe this, by the way, not because President Trump said it, but I do believe big companies buying homes is affecting how much we pay for them and if you even can qualify for them out there, right? And President Trump agrees. He claims the move would actually help make housing more affordable for many more Americans. So he put this out in a social media post, and he said that the dream of home ownership has become increasingly out of reach for many Americans. That action is needed to allow more people to reach the milestone of owning a house, a residence. He did add that he will provide more details about the proposal at the World Economic Forum, which is happening over there in Davos, Switzerland, later this month. So we have to wait for those details. I know I saw CNBC, I saw Fox, I saw CNN, saw a lot of these types of media outlets reaching out to the White House, and they all said the same thing. We'll talk more about it in specifics coming up in the World Economic Forum coming up. Institutional investors, by the way, like what does that even mean, right? You might be asking yourself. Well, they account for about 1% of the total single family housing stock, which doesn't sound like a lot. The problem is that they dominate in markets that they're in. They're like 4 to 5% in Jacksonville. Atlanta's got an over 4% amount of them as well, right? So out there. So they do affect certain markets. Now, some markets they don't obviously affect at all. So these and institutional investors are people that own at least 100 properties. Is where you get into these large number guys. So there's a recent rise that has happened with these institutional investors. They purchase single family homes, and there are reports out there in studies out there that show that these people, these companies buying all these houses can have a negative spillover effects for regular consumers like you and me out there. In 2024, the Government Accountability Office, well, they found institutional investments can increase rents and home prices, particularly in geographies with high concentrations of investor owned properties. What they can do is they go in, not necessarily one neighborhood, but a bunch of neighborhoods in the area. Let's say they buy 20 houses at a price. They raise that price up, then they can sell all those prices, which of course means all the house prices go up at that point, right? With them buying them at the higher prices or putting all the work into them and then unloading them there, which pushes up the prices for everybody else because they're doing multiple sales, both buying and selling at the same time. It's not like one of them's just higher. Advocates for policies benefiting property owners, well, they said they would support policies that actually block these large investors from buying all these properties. More than 75% of homes across the U.S. are unaffordable for most Americans. We told you that. That's according to Bankrate. We've been on that report and that number all year long there in 2025. And Bankrate is where we got it from. And Association of Realtors, they show that only 24% of home purchases in 2024 were made by first-time home buyers. That's down from 50% that happened that first-time home buyers back in 2010. Quarter, basically cut in half, actually, right? 50% to 24% since 2010 on that side. So I get it. It's a small percentage of these large firms buying, BlackRock and those types of companies all took baths yesterday on the stock market after President Trump announced this move. But they do affect markets and the markets they're in. They do affect them. They cause prices to go up. And then on top of it, right, they cause rents to go up. Hey, we bought this house. Let's charge this much for rent, which then forces and it allows everybody else to raise their rents up as well. So it is an interesting move by the president. And actually, it's one I do agree with as somebody that, I'm nowhere near the 100 level, but, somebody that does dabble into that rental market and the kind of the frustrations of dealing with those big institutions, right? They can just come in and buy a place and go, so like the house is on the market for 300,000. They can come in and say, we'll give you 350 cash. Boom. They just buy it. And you can't compete with that as a small time person, right? Hey, interesting enough. We're going to move over to California here. And it's just, I'm going to tell you this story is just a heads up on what taxes. Like everybody says, tax the rich, tax this person, tax this, tax that. And this is a real life example here. We have a bunch of them, and we're moving and looking at California, right? So coming up shortly in a year, but the date that the tax actually begins in terms of your wealth out there was January 1st of this year. And what we're already seeing out there, or what everybody's seeing out there, and we're talking about that wealth tax, California's billionaires that are facing that wealth tax, some of America's top business leaders, Well, they're making their moves now to leave California because of that wealth tax going into effect here in the next year. For instance, Google co founder Larry Page, several business entities that are linked to him, they were moved out of the state in December, moved to Florida, Texas. I saw a lot of those types of states is where those companies moved to. Oracle founder Larry Ellison, well, there's details out there about a reported $45 million off-market sale of his San Francisco home. Well, they haven't independently confirmed that sale, but the New York Post did report the sale and said it would mark the city's largest real estate transaction that happened in 2025 as well. So, so those are just two billionaires that we have signaled they're planning on moving assets in their real estate out of California. Why are they doing it with this wealth tax? Well, this is it. By the way, this wealth tax has not even qualified for the November 2026 ballot yet, but it is a proposal, and it would propose a one-time 5% tax on net worth of California residents worth more than $1 billion. Some things are exempted. Real estate's exempted. Pension plans are exempted, and things to that effect. But the tax would be due in 2027. Taxpayers could spread payments over 5 years with additional cost if you spread them over those years. So if you do the math, 5% of $1 billion, folks, a lot of money that these guys would have to pay out there. And that's just the ones worth only $1 billion, right? How much money is this, right? For instance, Larry Page, well, he would owe about $7.2 billion based on his estimated $144 billion evaluation. This is nothing more than a tax, right? Is what they're paying. Ellison could be forced to hand over about $9.6 billion. His net worth is estimated $192 billion at that time as well. And that's from they get those from Ford's data and stuff like that. I'm just bringing that story up. Whether you like the taxes, you think billionaires should be taxed, that's a political commentary there. But people do move based off of that. You've seen it in New York. You're seeing it in California, people moving out of that. And now you're seeing some big, wealthy individuals there, again, moving and strategizing out of California as well in terms of just going specifically after them for tax money. So something to keep an eye on because we're going to get affected by it here in Arizona. Not necessarily because we're going to pass anything like that. Hopefully not, right? But mainly because some of those people will be moving stuff into this side. And how do we know who's moving where and where? Well, one way we know is from U-Haul, right? They rent the trucks out there. And one state is back at the top of the list of states to which most Americans moved in 2025. And folks, that state, yeah, the Lone Star State there of Texas. And this is all the annual roundup from U-Haul that we get these numbers. U-Haul calculates its growth index according to the net number of customers who rented a truck, trailer, or other equipment in one state and then dropped it off in another state. So in 2025, Texas was the number one growth state for the seventh time in the last 10 years. Last year, by the way, it was only in second place last year. South Carolina was the number one state last year. Also in the top five this year, Florida, North Carolina, and Tennessee are the other five, with South Carolina and Texas. Do you notice who's not in that? Arizona, right? So those five states also made up the top five in 2024 and 2023, by the way. They were all in different orders. They rotate their orders out there. But interesting enough, the bigger figures here are 8 of the top 10 states where people are moving to, all located in the south of the country. And then on the other side of it, 8 of the 10 bottom states, those with the most out migrations, well, they're northern states, actually, is what you're looking out there. Yeah. So people are moving out of the cold weather northern states and moving down into the southern states, according to U-Haul there. Among the biggest losers of people leaving, well, California was at number 50. Illinois, New Jersey, New York, and Massachusetts, people leaving those states. By the way, California's sixth straight year in last place, which means people leaving out there. But in 2025, it's a smaller net loss of people leaving in 2025 than they did in 2024. So interesting moving rates there, right? Like we can figure this out with that wealth tax for billionaires. They're starting to move. Then you get the stats are there, at least on the U-Haul perspective, of people leaving The blue states, the cold states there, and moving into red states and warmer climates here with their move out of those states. So interesting dynamics here that's happening in the United States. And yesterday also, it was a stock that we were paying attention to, and that would be GameStop out there. Well, a little bit more details here because GameStop stock was up yesterday when we looked at it at the end of the show, and it was all because of the compensation package for their CEO. Well, when we delved more into that yesterday afternoon, and this is the update for you, GameStop did provide those details of that new compensation package for their CEO. And interesting enough, it's dependent on him meeting certain significant performance targets for him to get paid. Yes, folks, he's an at-risk employment here, meaning he makes zero money unless he hits these performance goals. This all came out in a regulatory filing yesterday, and the CEO would have to grow its market capitalization to $100 billion, and it would need to hit $10 billion in cumulative performance numbers, which basically is earnings before interest, taxes, and depreciation numbers, right? In order for his award to fully vest. GameStop did say the CEO won't receive any guaranteed pay. So basically, it's no salary. That's how they're defining it. No cash bonuses, no stock. That simply vests over time. So zero compensation is owed to the CEO unless he hits his numbers, right? Yeah, this is fascinating how they're structuring this. But they're not the only one, right? This structure is similar to the package that Tesla shareholders approved for Elon Musk, their CEO. That's the one where Musk would receive Tesla stock worth $1 trillion if he hits certain performance targets over the next decade. So GameStop following that same model there with Tesla, and the market liked it yesterday. The stock was up yesterday. I don't have the graph for you here today for GameStop. I tell you what, if you bear with me for a second, let's take a look at it and see what GameStop's doing today. But yeah, would you go and be a CEO of a company if your pay was only based on performance levels, nothing else out there? Would you be willing to do that? Is kind of the question you've got to think about here today, and maybe we'll see more of that as well. So actually, the stock isn't coming up for me right now. Let me try that again and see. Let's just see if we can look and see what it's at here today. Well, we're waiting on that. So I tell you what, let's take the break here at McCollum on Business. Come on back and look at some more stocks, the stock market, and some local stories you need to know out there. Come on back, folks. Thursday edition, McCollum on Business. And we're back here, McCollum on Business here, live on Robat TV every day at 11 o'clock. Don't forget, programming note, we're going to stay at 11 o'clock here. We're going to do a test out here at least one day a week. So starting on Monday, we're going to be here live at 11 o'clock on Robat TV. Monday, Wednesday, Thursday, Friday here live at 11 o'clock. Tuesday morning, though, we're going to go live at 7 a.m. here for McCollum on Business. We're going to do a morning business show and just see how it works out, how we like it, if anybody likes it, how the format's going to be similar, but a little bit different out there. So on Tuesday, live at 7 a.m. for Tuesday's McCollum on Business show. We'll start that next week and try it out. We might just go back to 11. We might switch some things around. Might get to a couple of days a week could talk business. We'll see where we go with that out there. Of course, once we're done here, we go on demand here at Robat TV as well. We appreciate those of you that do subscribe for us there to catch us live or on demand at Robat TV. Don't forget also, well, our production side of things here for the company that Kobe, Riley, me, Ethan, our company here, that we just do a lot of production stuff. There is a YouTube page out for it out there. So check our programming out there as well. No podcast for this show, but a podcast for the main event. We just wrapped up today, 8 to 10 a.m. It was me and Dale for the first 30 minutes or so. Then he goes off on his Thursdays, and we get Uncle Lou in at 9 o'clock. We talked NFL playoffs this weekend. Even if you're not a gambler, yes, he talks the gambling side of it, but he can give you good information and knowledgeable information for you to talk to your coworkers or your friends out there and try to make you look a little smart. In terms of what's going to happen this weekend out there. Uncle Lou, 8 this morning at 9 o'clock as well, all posted on demand at Robat TV right now. Of course, live 8 to 10 a.m. here at Robat TV on the YouTube page. And then, of course, free podcast system. Just search at TME Sports Show. Follow us for the social medias as well at TME Sports Show. Love interacting with you there as well. And you saw the commercial there for the pit stop. We're getting closer to the race season starting again. Daytona 500's less than a month away now. IndyCar doesn't start until March 1st this year. Folks, we have the pit stop coming back for your entertainment. Here in the next few weeks, we'll be announcing the start date for that program for this racing season here shortly. All the shows are on demand at Robat TV for last year. The shows are also on the YouTube page and the free podcast system as well. Follow us at the Pit Stop Talk if you want to follow us on social media or search for that podcast system. It's right there for you as we are ramping up for the racing season. And then, of course, the Real Matrix, as you saw there. We moved that show. It's going from Wednesday till Friday here, starting this week. Friday at 10 a.m. is when you'll see some Pit Stop. New episodes every week coming your way. For those of you that follow the Real Matrix, you can follow it here, Robat TV. It's got its own channel, the YouTube page. Free podcast for that as well. At the Real Matrix. We haven't really advertised the podcast anywhere but here at Robat TV. Well, it's getting some listeners out there, folks. So we appreciate the people that found it. We're changing some formats up, splitting up the hour shows into two parts. You'll start seeing that this week here on the YouTube page. The podcast has always been two-page, and we've got some feedback from people saying they want it split up into basically a half hour one, half hour two for each episode. So we're doing that on the YouTube page, Robat TV. For those of you that do like the hour, we do see the numbers there as well. Fantastic. We know you guys like that hour-long format, so we're going to keep that the same for you there. So all the same shows, split up in the different ways, but they're same shows out there. The Real Matrix, the Angry Patriot, just asks that you let's go into his show with an open mind as you see what's out there. This Friday at 10 o'clock. The Angry Patriot, Dale Hellestrate, of course, 17-year NFL lineman and three-time Super Bowl champion. He joins him this week with John Holmberg from 98 KUP's The Morning Sickness is joining the program for this week's show, as that does come out on Friday now, 10 a.m. there for the Real Matrix. All that being said, folks, let's get right back into the Market Watch. Well, the Dow's up today. The Russell 2K's up today. Everything else, S&P 500, NASDAQ, are down today. All because people are rotating. Traders are rotating out of the tech stocks here today. We talked about that in our stocks to watch there at the top of the hour. If you missed that, definitely catch it on demand and get caught up on that here. But Dow Jones is up 282 points right now. The S&P 500 still down that 6. The NASDAQ's down the 121 points today with NVIDIA and Apple all down. Apple in its 7th day of negative numbers for it, if that holds up. Russell 2K is up the 30 points right now, that small cap index. So what I'm saying is people are rolling out of the tech stocks and looking at some Russell 2K stocks out there and some Dow Jones companies out there and rolling the money into that out of the tech stocks. It looks like that is what's happening here today. Bitcoin still trading in that 91,000 range, is down today off of yesterday's numbers, but 91,083 here for Bitcoin here on this Thursday. It seems like 90,000 is the new baseline. We'll see if it stays above 90 or does dip down into that 80,000 where we saw that a lot at the end of last year. Stocks we're paying attention to this segment, or we're going to look at defense stocks here today. Why are we going to look at defense stocks? Well, throw up the first one here. Northrop Grumman is the first stock we're going to look at, up 3.55% for them. Let's look at Lockheed Martin as well. We got four of these defense stocks for you. Lockheed Martin's up 4.62%. Before we go to the other two here, let's talk about this a little bit. Why are defense stocks at least all up today? And I'll just tell you, all of them are up today. Well, and this is a bright spot today if you're in the defense contracting world, because everything's rallying because President Trump came out this morning and he called for a $1.5 trillion defense budget in 2027. That's a huge increase, folks. $901 billion was approved. The budget was approved by Congress and for 2026. So President Trump wants a $901 billion budget to go to $1.5 trillion defense budget in 2027. Obviously, Northrop Grumman, as you saw, Lockheed Martin up 4.72% today. RTX is the next one we're going to look at. That's the parent company. They're out of Virginia, but you got Raytheon down in Tucson, which is one of their companies right there, right? They're up 0.84%. And then finally, Kratos Defense, also up today, and big numbers for them. 15.28% up for Kratos Defense. So defense stocks are popping today. No guarantee it's going to come. President Trump just called for that huge increase in the defense budget. We'll have to see what the final numbers come in, but President wants to go from $901 billion to $1.5 trillion for the defense budget in a year. Well, defense stocks are going to benefit from that because obviously they'll be huge beneficiaries with that budget increase in the defense stocks. So that is a bright spot here in the market as everybody's rotating out of the tech stocks and defense stocks benefiting on that side. So it's funny how markets and specific industries can move, right? We talked about the data storage earlier this week. I think that was yesterday, right? Now defense stocks today. It's an amazing how they all move in sync here when stories come out and things to that effect, right? So let's talk a couple local stories here. And these guys, the company we're about to talk about, they were local. They started here. They were sold off. They moved to Texas. Well, they're coming back here to Arizona, folks. Yes. We're talking about that healthy food chain, right? The quick serve. You pull up, you order your salad, and you literally go. Yeah, Salad and Go is going to move its headquarters back to Arizona. Not only that, they're going to close all of their Texas and Oklahoma locations at the same time. And so they're moving back to Arizona, getting back to their roots, and getting out of that Texas-Oklahoma market as well. Their CEO came out and told the Phoenix Business Journal that the company will close 7 stores in Oklahoma, 25 stores in Texas. Now, remember, they did a big pullback earlier this year as well in those markets. So they're not only that, but they're moving their headquarters out of Dallas and their central kitchen out of Dallas and moving it back here to Arizona. If you don't know, Salad and Go was founded in Gilbert back in 2013. It grew extremely quickly, and the people that started it up were the same people behind Angie's Lobsters. If you didn't know at that point, and why did it grow so fast? Well, low cost salads is the reason. Quick, easy setups as well in terms of their buildings. If you've ever been there. Well, the company expanded to Texas in the early 2020s and now getting out of there. This new CEO, his name is Mr. Tattersfield. He took over as CEO in April of 2025. He said the expansion and building of the kitchen in Dallas was a flawed plan, and he said that it created an economic burden for the Salad and Go company. So the closure of the locations in Texas and Oklahoma will affect about 600 employees. And it comes after, as I told you earlier last year, Salad and Go closed 41 restaurants in Texas in September of 2025. So the writings were on the wall there in those markets. And if you want to go back to when they relocated their headquarters to Texas, Yeah, Salad Go did actually maintain an office here in the Valley. It can hold about 25 people here. But the CEO did say the plan is to keep that space running for the next 18 to 24 months. And that's all because corporate employees have to relocate from Texas now and come back to Phoenix. And then after that time, the company plans to open a larger headquarters here in the Valley. So, additionally, well, they plan to focus on Salad to Go's history as an Arizona based company. They're going to invest in existing restaurants and introducing new menu items, things they've already named, like the Big AZ Burrito or Big AZ Drinks. I'm sure it's Big Arizona Burrito, but they spell it Big AZ Burrito, and Big AZ Drinks is what they're calling them. Selden Go's 7 Las Vegas area locations, they say those are going to remain open. The CEO did add that they could see the company expanding into Southern California in the near future as well once they get this move all done. So Selden Go coming back here to focus on Arizona and these western markets instead of Texas and Oklahoma at that time frame as well. But I found it interesting the CEO calling it a strategic mistake to make that move to Texas is an interesting one in my eyes as well. Hey, months ago we told you about Avelo Airlines. They don't actually operate here in Arizona, but they were operating at Mesa Gateway Airport for a few months. Well, now we know that Avelo Airlines is going to shut down its base there in Mesa on January 27th. This was the company that was doing the deportation flights out of Mesa Gateway Airport. Well, that's going away as of January 27th. They don't do any other airlines, just unless you're being deported out to another country. They flew as part of the Department of Homeland Security charter program, but a spokesman for the airline said it did not deliver consistent enough revenue to overcome operational costs for them. The company did face a lot of protests. I live out of that area, and every time I drive by it, there were people just lined up with signs and everything outside of the airport and protesting that. Avello did say all decisions were made for commercial reasons, no politics or anything else. They just weren't making enough money doing that business out of Mesa Gateway. They used 3 Boeing 737-800 planes for the flights. The original move, well, it inspired an online boycott petition and, sharp, like I said, people standing outside and a lot of criticism, not just for the airline, but Mesa Gateway Airport for allowing them to be out there as well. The agreement between Avella Airlines and Homeland Security, it's not made public. We don't know what they were making in terms of financial stuff. We don't even know what the destinations was for their deportation flights. We didn't get that information either. But shutting down January 27th out there at the Mesa Gateway Airport for them. And if you're eager beaver when it comes to your taxes, let's put it that way. I know some people are like, when can I submit my taxes? I want my refund. Well, if you want to do that and you're an Arizonan right here, well, you can start preparing your taxes now, your individual tax returns. Problem is if you submit them here early, you could have to end up amending them later. Not a big deal, but and it might actually be in your benefit as well. But the reason why there's a disparity between what's on the latest tax forms printed by the Department of Revenue and then Arizona state law out there, folks, it's a $750 difference. And it's a $750 difference in the standard deduction, by the way. And it's due. Why are we having this problem? Well, it's because Governor Katie Hobbs ordered the department to publish forms that adopted only some portions of President Trump's tax and spending bill that was passed last year. Yeah, it's like ignore some of them and put some of them on there. I don't get why you would do that, but I'm not the governor. If the state fully adopted the federal tax plan, it would cost Arizona nearly $500 million, by the way, in terms of refunds and stuff to that effect. Hobbs is pushing for her own state level cuts, and that's going to face an uphill battle, folks. Right, a lot of Republicans in the state legislature, well, they're drafting their bills to follow the federal code. She wants her own cuts in there, and she's trying to fight that system instead of just going with the federal side of things. State lawmakers are likely to start looking at the tax bills shortly after the session starts. And they start next week, by the way, is when they get the new session started here for 2026. So just a heads up, go ahead and file. Don't get me wrong, but you might have to amend them in the future if that does happen. And I don't know. I'm not a tax accountant. I don't know what that means if you don't. I don't know if that means more money. We'll have to see how these tax bills run out. But just giving you just a little heads up there as well. And another, we heard Salad and Go is moving back to the Valley, their headquarters, focusing on this market again in Nevada and Southern California. Well, the thing with office space is people aren't buying it like they used to. Thanks, COVID, right? We've learned about hybrid working systems. Banner Health is another company, obviously, is a big company here in Arizona, and they're drastically downsizing its Arizona corporate headquarters. They're going to reduce the space from 304,000 square feet. They're going to go down to 67,000 square feet as well. So they're moving from the Phoenix Plaza. They're going to go to basically a place called Bond Phoenix. That's over on Camelback Road. They're going to make that move by the Q4 of this year. The move does reflect a shift to a hybrid work model and improve financial stewardship with the company, meaning don't spend all this money on retail or on space that you don't need. The move reduces corporate space by more than 75% for the company. Yeah, and the reason why is, as I told you, fewer employees work in the office on a daily basis. It's a hybrid model. Banner Health is the largest private employer in Arizona, if you didn't know. And the downsizing does align with the company's strategy to align its physical footprint with its flexible hybrid work strategies. Yes, that's a big change from its 2015 move, is when they moved to that larger space for full-time in-person staff. And obviously 2015 was before people got used to working at home and with the COVID stuff and all of that things out there. So corporate space continues to be an issue here, especially here. We're in downtown Phoenix, and we're even in a building where people are moving out. They don't need that space anymore, the large spaces. So they're moving around and moving into smaller areas and downsizing, as well as workers are just, you know, working from home or coming in a few days a week out there, folks. So, hey, I appreciate you joining me here for this Thursday edition of McCollum on Business. I'll be back on Friday. We'll get you ready for the weekend and what's happening in the business world. We'll see tax stuff. We'll see, of course, the non-farm payroll report from the Department of Labor Statistics tomorrow morning. See how that affects the markets as well. People rotating out of tech stocks we saw today. Yeah, a lot of stuff happening, folks. So come and join us, would you? Either live here at Robat TV at 11 o'clock, on demand on Robat TV, YouTube page as well. We'll see you tomorrow, everybody, on Friday. Have a great Thursday night. Stay dry out there. Fiesta Bowls tonight over there in Glendale, but stay dry in this rain that we're having. We'll see you tomorrow, everybody.